Welcome to another episode of Between Two Dots, brought to you by Intention Media, where we interview guests and try to discover how they are living intentionally. On today's podcast, we are joined by Julian Klymochko. Julian is the founder, chief executive officer, and chief investment officer of Accelerate, a recognized leader in the alternative investment industry. Julian has built a career at the intersection of FinTech, innovation, entrepreneurship, and disciplined capital allocation. With more than 15 years of experience managing hedge funds, private credit, and special situations investing, Julian is widely regarded as a pioneer in bringing institutional caliber alternative investing to the broader investor audience. At Accelerate, he oversees investment strategy, portfolio management, and the development of innovative investment products. Julian is also a respected author, speaker, and podcast host. Through writings, media commentary, and the Absolute Return podcast, he provides investors with insight and on the global markets. This was an amazing opportunity to get a real insight into what it takes to build the type of firm that Julian has had the fortune of starting. It's so great to hear the humble beginnings and what has transpired over the last 7 years, where Accelerate today has over $200 million of assets under management and a team of 9 and growing. Please join me in welcoming Julian to the podcast. Julian, thank you so much for taking the time to come on the podcast. Where are you taking the call from today?
So I'm at the Accelerate headquarters, downtown Calgary, Palliser South, right behind 9th Ave behind me, and quite a bit of construction.
Awesome. And just being in downtown Calgary, that's probably a great segue in terms of starting the conversation, starting from the beginning. Have you always called Calgary home, or where does your story start?
No, I haven't been in Calgary my whole life. I was born and raised in Winnipeg, Manitoba, and went to school there. And when I finished university, so I got degrees in engineering and finance, which happened because I didn't know what I wanted to do. Then kind of discovered finance halfway through my engineering degree. So I figured I'm not much of a quitter, so I'll just finish that and do another degree because I was really interested in finance. And then I got recruited into investment banking and had a choice of Calgary or Toronto, and I chose Calgary for several reasons. Had some family out here, and I really like the mountains.
Yeah.
So that brought me out west almost 20 years ago now, and I've called it home ever since. The 2000s oil boom brought me out here for the most part.
Yeah. I don't know. I guess I'm not sure if there's an official definition, but just being Winnipeg, I consider Western Canada, BC, Alberta, Saskatchewan, and Manitoba, but maybe I've gotten that whole thing wrong the whole time. But those are just my views.
Yeah, west of Toronto is all basically the same.
Yeah. Julian, so you spent a lot of time growing up in Winnipeg, and did you have any siblings growing up?
Yeah, two older brothers, and they live out here now. It's one of the reasons I moved out to Calgary, just because they were already living out here, and that made it pretty easy to make that transition. It's already had, family and friends out here. So yeah, the youngest of three, so I got beat up a lot when I was a kid, and good training for, I guess, the business world in terms of getting beat up all the time.
There you go. Yeah. Lots of beatdowns when you're starting your own business, and I'm looking forward to kind of getting to that as well too. And But I'm curious as well too. Like you have an engineering background and a finance background, two very analytical, things. Were you always that type of child as well too? Like were you the proverbial like Lego builder engineer type of child, or like what kind of kid were you?
Yeah, and so I would say I always found math and physics relatively or easier than average, could get, really good grades on tests and things of that nature. And got a fun fact when I was kind of in senior year of high school, I wasn't even planning on going to university. I wanted to move out west with my friends to be a snowboard bum, work at Lake Louise and snowboard every day. That was my plan. And I remember in senior year in high school, I thought I was filling out a form to get more information about the University of Manitoba. I didn't really look at any other universities, although I did have a kind of mid 90s average in high school. And to be honest, I didn't try that hard, unfortunately. I was more interested in other things. And I didn't know what I wanted to do. My parents weren't really in the business world or didn't really do anything that I was interested in, and I had no exposure ever to finance or engineering for that matter. And the guidance counselor looked at my grades and said, "Hey, you should apply for engineering," and filled out a form. Just thought I was getting kind of more information, and next thing I know, it was actually an application, and I got in with a scholarship. And I saw that money, and I didn't want to waste it, so I thought I'd go to university for a bit, then join my friends snowboarding. But once I had that momentum, I really just wanted to stick with it, and my plans
Mm.
changed. And I think I was in university where I started to become ambitious.
Yeah.
Mm.
What did your parents do for work then?
So my mom was a school psychologist. It's funny, she said she's had one job interview her whole life. She finished university, had one job interview, got the job with the city school system and stuck with it until retirement. And then my dad was just in the car business, whether it's like auto body shops or car dealerships and things like that. And he didn't finish university, so I didn't have a ton of exposure or resources growing up.
Yeah.
Mm. Yeah, that's pretty interesting. Crazy how like a conversation with your guidance counselor can just turn into a full ride at a school. Like did
Yeah,
you ever reach out to that
it
guidance
wasn't a full
counselor?
scholarship, but it
Yeah.
certainly was a lot more money than I ever
Oh,
had.
for sure. Yeah, I mean that's incredible, right? For someone that wasn't even planning on going. I mean, it sounds like you're pretty smart anyways, and it sounds like you yourself said you weren't trying hard, but you had these mid 90s. So your guidance counselor was like, do not flush this opportunity. Like you're a smart dude. Get in there and do something with your life. Did you ever keep in touch with that person after, or?
No, I didn't. I kind of lost touch with most folks back home, aside from my friends. But with respect to kind of how things balance and, while having really good grades and I suppose higher than average traditional IQ. Conversely, and perhaps this is good working in finance, is probably much below average EQ. And so things kind of balance out there.
That's funny. That's really interesting as well too. But like very cool. So you end up in school. You say you were in engineering. Um, Tell us about how you got even exposed to finance through your journey in university.
That's a great question. So I was in second year engineering, and the opportunity for a business minor came up. And coming out of high school, I had like zero ambition. And by that time, I just started to get some momentum in university. And engineering was okay, but I wasn't passionate about. And I was in electrical engineering, so a lot of computer programming and things of that nature, and computer hardware, stuff like that. And the opportunity for a business minor, I thought, oh, that could be worthwhile doing. So applied for it, got into it. And my plan was to take classes in the summer, my business classes. And I took corporate finance that summer. It really clicked for me that after my first corporate finance class, where you're doing discounted cash flows and stuff like that, I really clicked for me, and I discovered near instantly that that's the field that I wanted to work in. I really liked quantitative finance.
Yeah. And so after, I guess you covered this quickly, but after your engineering degree, you took your finance degree in Manitoba as well?
Yeah, I basically did them at the same time, just a lot of extra classes during the summer, and was able to finish them both up 1 year after the other.
Yeah. And you mentioned that you had options both in Calgary and Toronto, and that was all in investment banking, or were there
Yes.
other kind of opportunities you were exploring as well?
I was also looking at energy trading out west as well, but decided to go the investment banking route.
Yeah. And what brought was it your two brothers were already in Calgary at the time?
Yeah.
And
Yeah.
then what brought them out? Was it just work as well?
Yeah, at the time, in the 2000s, the Western Canadian economy was doing very well and growing tremendously rapidly, and there were a ton of economic opportunities, and that's why a lot of the people in their 40s now living out west, many of them are from Manitoba and Saskatchewan,
Awesome.
as they made the pilgrimage for better economic opportunities.
Yeah. And so you decided on Calgary because you had family there, and there was a great opportunity lined up that was offered to you as well, right?
Yeah, exactly. And I had been to the city many times, and primarily for a career, though.
Right on. Did you ever end up meeting your buddies on the hills?
Yeah, several of my friends actually, they stayed out at Lake Louise for several years, kind of between 3 and 5 years. And I'd go out there for, spring break. And when they're done with that, went back to school, and some of them ended up moving out to Calgary, and we still snowboard together every winter.
Right on. That's pretty cool. Just like that camaraderie, but that's a fun story as well too. And you're the one that kind of got away, but you kept it real by coming back and joining them as well too.
Yeah,
So
exactly.
yeah,
Just different paths.
yeah, that's the way it goes, right? That's fun though too. So you got recruited. I'm assuming when something finally clicked in university, being a smart person even before you were kind of like finding your passion, were you just hit up by recruiters? Were there you ended up choosing Calgary, but do you remember the company that you started with first and like how that kind of journey started?
Yeah, of course. So in finance back then, the most prestigious job that a lot of the students wanted was in investment banking. And coming from not a target by any means, it was quite difficult because you're not going to, in the US, they'd be recruiting from like, the Ivy League schools, and in Canada, primarily from University of Toronto, Queens, Western, etc. So being at a non-target school, you didn't get a ton of recruiting, but there were certainly some opportunities there. And I still remember my first investment banking interview, and it was with TD Securities, and I got absolutely smoked. Like it was a terrible performance. I just really didn't know much about investment banking, and I didn't know the answers to what I learned later, very basic questions. So my first interview was disastrous. Obviously didn't get that job, not surprised. But luckily, I had an interview, a preliminary interview with another firm, BMO, the next day. And, I was so upset on how poorly it went that I literally went on the internet and downloaded basically every resource that I could. And I stayed up all night and learned what investment banking was. And that enabled me to really ace my interview with BMO the next day. And I was invited to Toronto. They call it like Super Saturdays, the phone interviews. Did that several weeks later and got a job offer, which for me was, one of the best days of my life up until then, because I didn't really come from any means and just managed to get increasingly ambitious and do well in university. And from it's pretty humble beginnings, and not a lot of people got investment banking job offers from my university. I was one of three, and I thought it was a phenomenal place to start a career. So I felt very blessed and lucky to get that opportunity.
Yeah. I remember, do you remember, I don't know if you ever came across this resource, but it was like the Vault Guide to Investment Banking. I remember reading that and just
Yeah, I think I read that one.
yeah, trying to understand, and the Vault Guide to Finance interviews, I think. But those are great resources at the time, probably a little dated at this point, right?
Yeah, but I encourage job interview preparation is very important, and I learned that lesson the hard way.
Yeah.
But back then there were far fewer resources, and I really had no coaches, right? I didn't know anyone who worked in finance, and I came from a relatively small city with basically no financial industry, like extremely limited. So I was kind of flying blind.
Yeah, I hear you. I could kind of relate to that as it relates. I believe the first investment banker that I met was during the interview process, and I didn't have the benefit that you had as it relates to. I assume that you had some pretty good grades coming out of university. I was like average, and as you know, that's a really easy call when you have like hundreds of resumes.
Yeah.
The GPA is a starting point to try to call that down, right? So I
Yeah.
think I was fortunate to have a few interviews in the off cycle scenario and managed to sneak my way in there. But it was great that you were involved in the whole Super Sunday experience, because I never had that experience but heard a lot about it.
Yeah, and I also, did successfully interview for energy trading. And so I had to make a decision and ultimately went with investment banking. It's because I thought it was the better opportunity. Not sure if that was the right call, but here we are.
Yeah. So
Any regrets?
No, not necessarily. It's just alternate paths that you don't know how they would have played out.
yeah. So how was your experience in investment banking as a junior analyst?
Yes, I was certainly prepared. I kind of viewed it as kind of basic training in the army, for 2 years, that it's really going to suck and you're going to have to dedicate your whole life to it and really have no life outside of it. So you're doing kind of 90 hours per week, get home at 3 in the morning and
Jeez.
working weekends, and yet it's positive for your work ethic, because once you put in that much time in the office, working like 60 or 75 hours a week kind of feels like part-time, because you have time for family, friends, a bit of hobbies. And so it's a great basic training, I would say. You get really good at financial modeling. You get to learn about mergers and acquisitions and how deals are done really from the ground up. So in terms of business training, I think it's a great place to start. Although it's not for the weak, it's pretty tough to make it through that.
Yeah. At what point did you know that you weren't gonna dedicate your career to investment banking? Was there an instance, or did you go into that fully knowing that this was going to be a starting point and you're going to do something thereafter?
And so in university, I became very interested in investing and risking capital in hedge funds, private equity, I really wanted to get to the buy side at some point because I felt like that's what I would be passionate about. However, coming out of university, there was no opportunity for that. And at that time, the path to go down was to start with, a large financial firm in investment banking. And then once you're done your 2 years, either transition or go get an MBA. And that was the path that I thought would make sense for me. So it was never my goal to stick with investment banking past, being an analyst and then trying to make my way to, ideally the hedge fund business. And, I did apply to a couple MBA programs. I applied to Harvard MBA. They rejected me. So I just said, forget it. I'm not going to do it. And so I just got a job at a startup hedge fund in the great financial crisis. And that sort of started my buy-side career.
Yeah. How did you come across that opportunity?
It was just through the local CFA society. Just saw that they're looking for someone and applied, and I got that. And the CFA program is something that I pursued as I went to the buy side, just to kind of further bolster my credentials. And in the Canadian investment regulatory environment, you basically need one to become a portfolio manager, which is ultimately, that was my goal to become in my career pretty early on.
Like, how do you get so clear so early on where you want to be? You said growing up, you didn't really have too many role models in that world, but I guess throughout your dealings, like I'm very green to that whole world, right? But was there certain things that just like drew you in? Was there a certain rush that you enjoyed with, on the buy side, or how does that work?
I guess no one really knows where life's going to take them, and you kind of just got to follow the opportunities as they present themselves, and ideally find something that interests you that you can be very good at. And I thought that, being inclined quantitatively and seeing the opportunities within finance, and I thought that I could be very interested in it. And in order to be good at something, you just really, I don't know if passion's the right word, but just to drive to want to be the best in that industry. So I really kind of just pursued what I thought seemed very interesting at the time.
Gotcha. So then for like the layperson like me who doesn't know exactly what your job was, what was your job and that at that time?
When I was first went to the hedge fund business, or prior to that in investment banking?
Yeah, when you went to the hedge fund business.
So I started out in the great financial crisis, which was a very volatile period in which many people thought the financial system was going to collapse. And the key aspect of volatile, uncertain periods is they also unearth a lot of investment opportunities where you can make a lot of money. And at the time, we were focused on arbitrage opportunities. And what arbitrage is it's basically buying. Arbitrage in the stock market is buying a security and short selling an equivalent security and earning the spread in between them without taking market risk. So for a practical example, a real world example, say you can buy a TV on Amazon for $100 and sell it on eBay at $120 without taking much risk there. So you're earning a spread. And the goal is to make money no matter what the market does. And during the great financial crisis, the spreads were very wide. So you could basically earn near riskless returns that were like, north of 20%. So it was a very fruitful investing environment. And what I really enjoyed about that business was basically like the market's a puzzle. And I was always a fan of puzzles and, games, video games, and trying to solve very complex puzzles. And ultimately you go in every day is different. Every day you're competing with, call it hundreds of thousands of very, very smart people in the global markets, and you try to find kind of little niches where you can outperform and figure things out before other people do. So instantly, it really resonated with me, these arbitrage investment strategies, because prior to that, I mean, I had been exposed to merger arbitrage as an investment banker because you advise on mergers and acquisitions. That's a major business of investment banks. As an analyst, you are, modeling things out, modeling out how the merger is going to work, accretion, dilution, all these sort of financial terms. And what merger arbitrage is when you have a public company that's getting acquired. Say a target is getting acquired at $10 per share. Now the stock won't trade there because every deal has risk to it. So say the stock trades at $9 and you buy the stock and you're in that approximately 10% spread over, call it 6 months. That's a 20% annualized return, or 10% over 6 months. That is a basic merger arbitrage trade. And I saw those opportunities on deals that I was working on. And that really clicked for me. I thought this arbitrage stuff is very cool. And maybe one day there'd be an opportunity to do that, as a principal. Now, the difference between investment banking and hedge funds is, as an investment banker, you're not taking principal risk. You're just in an advisory role. So I always thought that it was something that really resonated with me, that I wanted to be a principal risk taker, because you get to conduct your analysis, and from that, make a bet whether you're right or wrong. And so if you're confident in your analysis and you make that bet, then it's like you get compensated for successfully solving these puzzles. As opposed to banking, you're just, paid for advising. You're not taking principal risk. So I like kind of the winning and losing of the capital markets when you are a capital risk taker. So that really appealed to me. And then on the arbitrage side, I figured out it was a method of investing that you could really stack the deck in your favor. And I thought that really appealed to me as well. It kind of seemed like a bit of a cheat code.
Yeah. And Julian, the fact that you were at a startup hedge fund, did you find that you were able to get exposure to activities within that fund earlier on than if you were at a more larger and more established shop? That'd probably take you several years to kind of get to, but you were probably able to see a lot and do a lot as a result, right?
Oh, certainly. Like to be, associate portfolio manager in my mid-20s, and hedge fund portfolio manager by my late 20s, and chief investment officer by, I don't know if I was, 28 years old or so. Oh, you'd never get that opportunity at a big firm. Like you'd be way behind that. But, you're dealing with far more career risk, far less capital, but you can really sort of drive the opportunities yourself, which is something that I was interested in. And, when I told the bank I was leaving, they're like, oh, it's a huge mistake. This firm is brand new and you're leaving this, big financial institution for effectively a startup. But, I figured it out.
Yeah. And then so what happened with the hedge fund then?
And so we grew, and I took on more responsibilities and learn the ins and outs of the business, what worked, what didn't, over a period of 9 years. Kind of rose from an analyst to portfolio manager to chief investment officer, and kind of leadership. and then saw a great business opportunity to strike out on my own. And I left to pursue that kind of in my early 30s.
Yeah.
I thought the time was right and thought it was a good idea that someone should do. So I thought that it should be me instead of someone else.
Awesome.
Yeah, why not, right?
Yeah, and still fairly young and thought it was about time. I'd always dreamt of entrepreneurship. I thought that, those were the real sort of all-stars in business. You look at the most successful and renowned people in business, and they tend to be innovative entrepreneurs that you see out there. So I thought that if you think that it's an interesting concept, and I think that entrepreneurship is born out of a market inefficiency where I think the job market undervalues your skills, or perhaps you overvalue your own skills. And in any event, that sort of pushes you to become an entrepreneur if there's that inefficiency. You're probably overconfident, and other people may not recognize, what the value that you bring.
Mhm.
One or the other, or maybe both, who knows? But there's definitely probably some blind optimism and obliviousness when you strike out on your own. You're probably like just, at least I was, maybe a bit ignorant of the risks and difficulties.
Mhm.
Yeah, for sure. I think that's a great description. Just the way you just like nonchalantly say that as well too. It's pretty spot on. It's pretty hilarious, but because it's true as well too. The blind optimism and like the mix of ignorance as well too. You kind of have to have that little concoction to go out there and be like, I could change the world. Let's go, right? Make it happen. And
Yeah,
yeah.
what's funny is that recently an interview with NVIDIA's founder and CEO Jensen Huang came out, and at this point in time, NVIDIA is the largest corporation in the world, worth $4 trillion. He's extremely wealthy, successful CEO worth several $billion, and one of the most successful guys ever. And the interviewer asked him, it's like, okay, go back to the formation of NVIDIA many, many decades ago. What would you do differently, or what advice would you give to your younger self? And he said, I wouldn't do it. I wouldn't start the company. And they're like, why? He said he had no idea how difficult it would be, the stress and the challenges, almost failing many, many, many times, too many times to count. And ultimately, he said it was a million times harder than he ever expected. And knowing what he knows now, the difficulty was like way too great. And I thought, well, if that's coming from perhaps the greatest founder of all time, definitely sort of top 5, top 10. What do us mere mortals have going for each other, going for ourselves? But everyone sort of gets that urge if you're ambitious and if you're confident in yourself. I figured you kind of wait for the opportunity, and then if the opportunity is there, then you just sort of gotta spring on it.
This episode is brought to you by Bloom Benefits Group. Bloom Benefits is disrupting employee benefits by rethinking the status quo. They provide exceptional customer service while saving you money. Bloom offers group benefits and retirement products, health and wellness accounts, executive benefits, life insurance, and disability and critical illness. Available to companies across Canada, Bloom helps clients save money without interrupting current plans. Check them out at bluebenefits.ca.
Young professionals, families, and entrepreneurs. What makes Zelos Investment Counsel different? Our independence, client focus, and access. Zelos Investment Counsel is independent from banks and brokerages, which ensures clients' best interests are served without corporate conflicts. We are fiduciary portfolio managers with a duty to clients that doesn't exist in the brokerage model. At Zelos Investment Counsel, we exist to care for our clients, and every day we strive to help our clients reach their goals. We provide our clients with access to institutional investment managers and sector specialists through our proprietary investment structure. For more information, book your no-obligation meeting today at zelosglobal.com. That's www.zelosglobal.com.
Attention all car owners. Is the winter weather turning your beloved ride into a rusty relic? Fear not, because we've got the solution you've been dreaming of. Crown Rust Protection. Picture this, your car defying the elements, standing strong against rust like a knight in shining armor. Crown Rust Protection is not just a shield, it's an investment in the longevity and resale value of your vehicle. Don't let rust take the wheel. Book your Crown Rust Protection treatment today and let your car embrace its inner superhero. Call now at 403-291-1951 or book your appointment at www.krown.com. Our skilled technicians are ready to give your car the VIP treatment it deserves. Crown Rust Protection, because your car deserves to age like fine wine, not rusty vinegar.
Today's episode is brought to you by Motive, a leading venture builder with over a decade of experience helping corporates and startups build, launch, and scale successful business ventures. Whether you're looking to innovate your business model, develop a game-changing product, or craft a winning go-to-market strategy, Motive is with you every step of the way. Their proven venture building process and technologies help reduce risks and accelerate time to market. Innovation is everywhere. Let's harness it together. Visit motive.digital to learn more. That's Motive spelled M-O-T-I-V. So bring us back to the origin of this opportunity that you were seeing in the market and the eventual firm that you were able to found. Where did the idea come from? Obviously, you were already in the investing space, so you were familiar with markets and opportunities. But what was the idea, and has that kind of changed over the course of time?
So at the time, I'd been in the private markets, running alternative funds for several years and kept running into the same problems. And, business opportunities come about when you have unique solutions to problems. And with that, when I was at my old firm, I remember driving in on a very kind of cold winter day and just thinking about things. And at the time, we kept running into these same problems, and I think the business was kind of going through a rough patch just due to these sort of hurdles that we kept hitting. And I had that proverbial light bulb moment, and I saw the convergence of two trends. One is the growth of ETFs, exchange traded funds, as a popular investing tool that were growing because they're very investor friendly for several reasons, meaning specifically because they're easy to use, they were low cost, and they're becoming very popular and growing very quickly at the time. This would have been early 2018. In addition, the segment of the market of alternative investments was also growing very rapidly. Hedge funds, private equity, venture capital, real estate, etc. And that light bulb moment was, well, ETFs are growing fast and they're great, as were alternative investments. Why has no one launched alternative ETFs such that you can take the investor-friendly accessibility, liquidity, ease of use, low cost of ETFs, exchange-traded funds, and put alternative investment strategies within them? I'm like, that seems like a really good idea. And then, quickly looked into it. At the time, the regulatory environment prevented it, which is why no one did it. And that made a lot of sense. But also, there was ongoing work at the financial regulator in Canada. It had been going on for several years and was going to conclude the following year in 2019. And that was to basically create a new market called liquid alternatives that would enable firms to blend alternatives with ETFs to create liquid alternative ETFs, which hadn't been done before. But that was the idea for that, that light bulb moment that I had. And up until that period, if you ever want to be an entrepreneur, like you're always coming across ideas, be like, oh, this is a great idea. You look into it, it's like, okay, that's bad. Oh, this is a great idea. Oh no, that's dumb, or someone's already doing it. And so I always had ideas and I'd write them down in kind of my startup journal. I'd be constantly writing up startup ideas. And once I had an idea, I'd try to kill it. So I'd try to kill that idea. And I do that by just researching it, finding out why it won't work, finding out that there's already, competitors out there doing it. It's already been done before. I think to be successful in a new venture that you need to be differentiated. You need to do something different and have a different value proposition. And this idea that I had in kind of 2018, and with the upcoming regulatory change where you didn't have an incumbent, and it kind of created this brand new market. And I tried to kill it, and I just couldn't. And so I'm like, okay, let's try this out. And so I left my previous firm. And the very next day, I had an office and a desk. And my plan was to work on this idea to see if I could gather any momentum to see if it could get anywhere. And, maybe it died quickly and I got a real job. But at that time, I had a sufficient amount of savings such that I was able to give myself some time to work on this idea to see if I could make a go of it inside an office and a computer. And I just started working away, putting together ideas, presentation, and a business plan. And I just started talking to potential clients and service providers about it, traveling around Canada, because I had connections in the industry. I had, clients that I used to work with. I had service providers that I used to work with, and started talking to them to see if there's any merit to this idea. I still remember, it was probably a couple months in, or maybe a month in, getting an email from my mom. She's like, I'm worried about you. You don't have income. You actually had a negative, I call it a negative job, because not only do you not have a salary, but you're investing in a business and trying to create something, and that costs money, right? And I remember every now and then I go back and I read my response and say, I'm just gonna work on this idea to see if I can gain any traction. And if I am not, I'll give it a few months. And if I get nowhere, then I'll give up and I'll get a real job. And that was then. And so we slowly gathered momentum and got team members to join me on this journey. And the regulatory environment went the way we predicted. Almost failed many times. There are a lot of hurdles that were almost kind of company ending, but we managed to not only keep it going, but grow over time. And that, that was over 7 years ago. So time flies, but we're still have a lot of work and our work cut out for us. So a lot more to do to accomplish what we set out to accomplish.
Yeah. Congratulations, because as we know statistically, most startups fail. Most startups fail in the first year, 5 years, let alone like surpassing 7 years. So it's a great testament as it relates to doing all the things that you had to do in order to kind of get to the point that you have now.
Yeah,
Maybe
with the previous comment that I said, like I knew it was going to be very difficult and low probability, but no matter what you think, it's always like a million times harder.
there you go. What does the business look like now as it relates to maybe assets under management or team members? Whatever you want to share as it relates to the state of the company.
Yeah, so we officially launched our first products in summer of 2019. So we got 6+ year track record, assets under management well above $200 million. So we have a good amount of revenue and a profitable organization. There's 9 of us on our team, and we're constantly growing and expanding and growing at a good clip now. And think about offering financial products and in financial services, it takes a long time to build a brand. In the finance industry, it's a trust-based business because you're dealing with people's money and savings, and they're not going to take a bet on a firm they've never heard of. So building within this sector, it's tough because sometimes you're competing up against the big banks who have this oligopoly, and they've been around for over 100 years, and there's one on every corner, and everyone knows who they are, and they generally trust those brands. So to build something new within the financial services industry, it's definitely a grind, and it takes you kind of got to will it into existence.
Yeah, absolutely.
Yeah, what was like your X factor? Like obviously you have to have good returns, but was there something like in the way you ran your business that you wanted to differentiate from some of these other larger, more established firms?
Yeah, so just out of the gate, our business plan was to effectively make alternative investments better, faster, cheaper. So we kind of viewed it like Netflix versus Blockbuster, where we can provide this better access point that's just way better for the client to use. That naturally we'd have a competitive advantage in addition to more competitive fees, better liquidity, transparency, accessibility, risk ratings. So we had these inherent competitive advantages that I knew would have market appeal because I was on the other side of the fence.
Mhm.
I knew there's these hurdles that absolutely sucked. And at Accelerate, we resolved those hurdles, and I thought that made us much more competitive. Now, that wasn't enough to be successful by any means. Like I said, building a brand is difficult, and you need to establish that brand trust. And for that, you need market credibility and exposure. And I think one aspect that really went our way was the use of digital marketing. So back then, call it 5-6 years ago, digital marketing within financial services was very early stage. And we had a huge competitive advantage because the larger firms wouldn't let their employees use Twitter or have a podcast or post anywhere, right? Like the compliance officers would just freak out. And I thought that was a huge competitive advantage. Plus, more importantly, for a firm with extremely limited resources, it was very low cost or effectively free. So we set out to start marketing ourselves on social media. So posting a lot on Twitter, LinkedIn, growing a following, newsletter, research, market commentary, and podcasts, webinars. And at the time, I think some firms were kind of like making fun of us because they thought doing those activities were below their level. They, of course, now all do those activities. But at the time, it was very non-consensus. However, I'd seen some firms do it that in the US very successfully, and there was very few that did it. It hadn't caught on mainstream, but I knew that if you could do it well, it could really help boost your chance of success. And I think specifically Twitter was a key unlock for our business in not just finding or building credibility in the market, but also finding clients and backers and generating a ton of PR opportunities. I've been featured in, Globe and Mail, Wall Street Journal, Bloomberg, Business Insider, all these different publications. I've never had a publicist. We've never paid for PR. Those are all organic, and probably about 100% of them were just generated by stuff that I tweet. And I've tweeted like, tens of thousands of times. And so I thought that was a key unlock that others weren't doing. The structural advantages of our products. And then lastly, and I think it's most important as an entrepreneur, is just grit and determination. We're not the smartest, not the best looking or the most resourced or any of that. But I thought when it comes to determination and not giving up, I thought I could outcompete and outwork everyone. At least that's kind of what I set out to do.
Yeah. How was that experience putting yourself out there? Because effectively you become kind of the face of the company in a lot of respects, just being the leader, and also through this content creation. Was that something that came naturally to you, or just based off of the reps you got more and more comfortable with it?
So I had zero experience marketing and we just sort of stumbled around and tried to figure it out. And at the time, social media and podcasts and building a brand online was still like early stage, particularly in finance. So I would never go back, listen to our first podcast, but my God, that was like really, really bad. And some of the stuff we were doing early on, it's like you gotta stumble around in the dark until you figure out something that works. And then you just grab a hold of that and keep doing what's working. So I think I figured out that pretty early is, try a bunch of stuff, find out what works, and then try to do more of that. So it's certainly a trial by fire, and I'm still like very much a student and learning all the time what works, what doesn't. But I thought of it as existential, so I never questioned myself in doing it. I just thought, here's one way that we can increase our chance of success, so we must do it.
Yeah, love it. Another puzzle for you to solve.
Yeah, but I'm much more comfortable with numbers than going on TV or whatever. Granted, after doing it hundreds of times, it's the comfort level grows. So I'm not a professional by any means on that, but it gets way easier over time, and you kind of figure out how to navigate that aspect of the business, because I think for most of my competitors currently, they still haven't made that transition. So, I've seen with other firms, if done successfully, it can really, really be that key unlock and differentiating factor to grow the business.
Yeah. How much time would you say you spend every week creating content, whether it's like on Twitter or whatever else?
Oh, quite a bit. So I try to write a long form piece every week, and I typically do that on the weekends. I wake up real early, kind of 5, 6 a.m. and just start writing. Kind of do that for a few hours. Saturday, Sunday morning is when I get a lot of the long form content now on the social media stuff. The beauty about it is you have a thought, open it up, type it, could be just, 20 seconds and you put it out there. And every now and then, I never know which ones are going to resonate. Sometimes I'm like, okay, this is a good one. Gets like 5 likes. And then I just put out something random and it'll get like 1,000 likes and, get a bit, a bit more virality. So ultimately, like you just got to put a ton of stuff out there, see what resonates. Because like I certainly don't know. Maybe others do, but I'm not that good at it yet, I guess. So I'm always on there. My goal is to be putting out kind of maybe like 5 to 10, tweets or posts, just quick hit pieces per day. It's commenting on kind of different market dynamics, just because from a investment business perspective, a lot of prospects and clients follow me on social media. So I view that as free advertising that our competitors are not utilizing effectively. And if you can do it well, that is one key driver of your credibility if you're a newer firm, right? You have to get the name out there. You got to generate those PR opportunities. You have to build that credibility. And I think in this day and age, the digital marketing side, if you don't have the resources to pay for it, that's the way you got to do it.
Yeah. Yeah, that's certainly landing and resonating and tracking with me. I mean, it's one of those things where I still cringe at my videos and all the things, but it's just like it's one of those tools and platforms that you have to take advantage of, right?
Yeah, and I think, at least for me, started out very rough, I would say, just fumbling around in the dark, and then you just sort of figure out, at least in my opinion, I think I kind of figured out some of the things that work just through trial and error. And so you just gotta keep chipping away at it, because for the first while that we had like no following, and we had some lucky breaks where you're on some key trends and you learn from, like, I'm always reading. I try to read as much as possible, books, blogs, publications, research. And I not only research for being, portfolio manager duties and CIO duties, but also marketing. And one marketing piece of advice that really resonated with me, it's like, okay, if you want people to pay attention to what you have to say, and if you want a good chance of kind of being viral and getting, say, PR requests and stuff like that, is whatever's happening, like the news item of that moment, have an intelligent viewpoint on it and just put it out there, because you always want to be sort of riding that wave of what is on trend. And so I've really tried to tailor my digital marketing activities to capitalize on, what people care about right now. Because if you don't, then you're kind of wasting your time. And I learned that the hard way.
Well, Julian, like really appreciate this conversation. It was really great to kind of hear your story from the beginning all the way to where you are now. And I'm sure a lot of our listeners found the useful nuggets as it relates to just even the nature of the business and what you're doing, as well as it's not all a straight line. And I think that's encouraging. That's kind of the message. Like sometimes you just have to try things and figure it out and be resourceful and grit and determination. So that really came through. But wanted to turn the floor over to you to maybe talk a little bit about how people could connect and some of the resources to learn more. The floor is yours.
Sure, and thanks for having me on the show. I really appreciate it. And if you want to follow me, just my X account at Julian Klymochko. So I'm very active on there. Feel free to reach out if you have any questions. And my message to the audience is just, never give up. I think that is the key differentiator between people who are successful and those who are not. Now, I'm not putting myself in the latter category. I think our story is still early, still in the first chapter and have a long ways to go. Hopefully, at least that's the plan. And, just kind of got to roll with the punches. And from what I experienced, and maybe others' experience is different, but the thing about entrepreneurship and starting a new business is just the frequency and magnitude of like bad stuff and negative news. It's significant. And so I say celebrate successes because at the start they're few and far between. And the bad news is it can be overwhelming and the setbacks and all of that. So I think you just got to not give up because starting out and keeping going, and even with successful businesses, they certainly have setbacks and challenges. And there's only one way through, and that's to be determined and have that perseverance, that grit. And I think the most successful people are outliers. So if people can sort of build that up internally, I think that's a key tool to rely on.
Mm. Yeah, wise words, Julian. That was an amazing chat. Like, I didn't know you before this call, and I'm super inspired. Like, I'm gonna go out and start creating some more content and throw it out there. I think that's a really good point about staying on point of what is on trend right now, just to keep it relevant. So that's a huge nugget that I pulled away, along with that determination and like Gilbert putting himself out there quite a bit now as well too. Maybe I need to get behind the camera and do that. So I want to take that personal challenge on. But thank you for sharing your story. That was really incredible. Appreciate it.
Yeah, no problem. And my advice would be to just stick with it because, when you start creating content online for a long time, like you'll get zero feedback and it's just basically putting stuff out there into the ether with nothing coming back, no feedback. You don't know if it's good, bad, or whatever, but it just takes time and can be a frustrating and painful long time. But I think as long as you stick with it, things will start coming back and you'll recognize, hey, it took me this long, but it's finally starting to resonate, finally starting to work. So,
Mhm.
and ultimately, it's an investment and it definitely pays off. It just takes a while.
Yeah. Amazing. Thank you so much again.
Yeah, thanks for having me. Pleasure.
All right, take care, Julian.
Thank you again for joining us for another episode of Between Two Dots by Intention Media. This podcast is co-hosted by myself, Gilbert Bong, and Hafiz Mita. If you enjoyed this podcast, please rate and review wherever you listen.